Welcome back, and today crypto has changed forever. We are in the cusp of major moves and changes in the crypto ecosystem, with just recently the Senate moving forward with the stablecoin bill that is potentially going to become law in due time. Now, what does this mean for crypto, and what does this mean for the future of your favorite cryptos? In today's video, we're going to be breaking down why this changes everything, including with Marty Party saying the cream will rise and the fake tech tokens will fall, and which ones are the fake ones and which ones are the real ones that are going to rise. We're going to go through the metrics today and help you identify the best coins and cryptos that are going to be around for much longer based on everything that we're seeing with on-chain activity, with off-chain activity, with the sentiment around crypto, and also with the usage of these chains, because there's a lot of chains in the top 100 that probably will not be around in 5 years and probably will not continue to rise in value, as there's other blockchains that are coming out with way more technology, with way more problems that have been solved. I mean, today, Ethereum is still trying to solve problems that many of the other chains are popping up and they've already solved. And so this is going to create major problems for some of the legacy cryptos out here that have been promising and promising and promising for years that they're going to be able to do this and do that and 100 million transactions per second. And they're going to have the most usage and they're going to have the most cross-chain interoperability and the most dApps. And it's not where we are today, and it's probably not where we're going to be tomorrow, because these things have been claimed for years. I mean, if you go back to 2017, I remember Justin Sun from Tron saying that they were going to do 1 million transactions per second. The blockchain is still not there. Now, granted, development never ends in crypto, but there are very clear metrics and signals that we can look at to know where to invest, when to invest, and what not to invest in. So let's get right into it. And don't forget to give this video a free thumbs up. Hit the subscribe button. We do videos like this where we deep dive and just really talk about where the investments look good and where they don't. These are just my opinions and my analysis. You may disagree. Maybe I'm investing in those. Maybe I'm not. Do your own research and make your own investment decisions based on your risk tolerance and your research. Let's get right into today's topics. Now, we're going to be starting right here with Marty Party, who is an on-chain analyst and host of Spaces and a crypto commentator. He said, and by the way, this was in response to the stablecoin bill moving forward in the Senate and probably going to be signed into law at some point. He said, what changes today? All the blockchains that were sold with theoretical performance and scalability metrics, but never achieved adoption sufficient to test these theoretical numbers, will fail and lose value. The cream will rise, the fake tech tokens will fall. Remember this post. Now, when I read this, it hit. It definitely hit, because we are now at the stage in the cycle where crypto is being regulated and legalized from a national standpoint. And then, especially with the USDC and the stablecoin bill, USDC even posting, USDC is the digital dollar. If you go back to my videos from many years ago, I was telling my viewers, many years ago, right, much lower prices in crypto across the board. I said, guys, USDC is becoming the digital dollar, and it will be the digital dollar. Go look at my videos from 2020. Just type in Cryptoviser USDC right here on YouTube and look at my older videos. I said it over and over and over. And I said, this is the CBDC. You know, everyone kept asking Jerome Powell at the Federal Reserve, are you guys creating a CBDC? And he's like, no, we're never going to. We don't care about that. And people are like, he's lying. They're going to create a CBDC. I'm like, guys, the CBDC is already created. It's USDC. And so this is why things are changing. Right now, we have Wall Street involved. We have large banks involved. And what they're looking at is the fundamentals. They're looking at the metrics. They're not looking at the hype. Retail, like you and I, we look at the hype, right? We look at like which ones are going to get the most sentiment, which ones have the potential. But Wall Street, they just look at the data. They don't care about any of that. They want to know, am I going to make money or am I not going to make money? And if it's a question mark, it probably means not going to make money, right? And so when they're looking at Bitcoin, we've heard this from BlackRock's chief investment officer just a few weeks ago, who said in an interview that they're looking at Bitcoin And a very far distant second is Ethereum. That's it. They're not looking at anything else. And while some institutions may be looking at it, the gold rush was the gold rush. It wasn't the gold and silver and platinum and palladium and all these other metals. It was the gold rush. This is the Bitcoin rush. That's what it is. And granted, people are going to make money in these other coins, but Bitcoin is really where it's at. This is what institutions are buying. This is what governments are buying. Bitcoin's where it's at. And a very far distant second is Ethereum. And so outside of these two, where the real money is flowing in, we need to understand, are these other coins good for our portfolio? Can they increase our wealth? Are they going to go up in value? Is the technology potentially going to be superior to that of Bitcoin or Ethereum, or solve some of those problems that Bitcoin and Ethereum cannot solve? And so taking all these things into account, we're now what I believe is in the final stages of the bull market for 2025. And eventually we're going to hit a bear market, maybe 26, 2027. And then 2028 is the next Bitcoin halving, right? So everything's happening very rapidly. But as we move forward, and now we know that USDC, or stable coins, I should say in general, I'm just using USDC because they already are tied in with the Federal Reserve. So they're already the digital dollar. And they even said that on their X page the other day. I mean, so it's not just me saying it now. It's also Circle saying it. But anyway, we're now at the point where companies and organizations and the banks and investment firms, they're all going to be looking at where the technology lies and where this is all going, right? Crypto is about, at least where we are right now, merging the traditional financial system with crypto, the digital financial system. Because for digital finance to succeed, you have to transition away from the legacy TradFi system. And TradFi businesses like the banks, they're starting to get involved in crypto. So they're transitioning as well into the digital world. But the difference between where we were a few years ago in the crypto space to where we are today is now it's about the results. It's not about the theoretical, it's about the results, right? And so if a company's saying, oh, we're going to create the best AI in the world, and they haven't even hired a single person yet, I mean, is that investable, right? Are they really going to do it? Probably not, right? You have to start building. I spoke to somebody recently. They wanted to start a business, but they didn't want to put any money into it. They just wanted investors. And I said, well, why would I invest if you don't even have a minimum viable product? Why would I invest when you haven't even started? Like, are you willing to quit your job and go there? No. I'm like, so what am I investing in? You don't have a business yet, right? You have to create the business and then you ask for investments. You create proof of concept, minimum viable product first. And this is what we are looking for in the crypto ecosystem. And so understanding all this, we can take all that information and then say, okay, where do we invest our money? Well, first, knowing that USDC is the digital dollar and the easiest implementation for these chains to get access to the liquidity of the digital dollar is to implement USDC. So if you go into Circle's multi-chain website, just type in USDC multi-chain and it'll bring you here. This shows you all the chains that have native support, meaning Circle is issuing the money onto that chain directly. It's not a bridge coin. It's not an insecure coin. It's a secure coin coming directly from Circle. And there you know it's backed by the dollar. So USDC is natively supported for 20 blockchains with more integrations expected. For Ethereum virtual machine compatible chains, USDC is deployed via a smart contract. For non-EVM chains, USDC uses built-in token primitives. And so we're many years, by the way. I've been covering this for years on the channel, this specific website, and we've seen the growth. And what I have seen, which has been very good teaching moment from an investor perspective, is as this list has gotten bigger, what I have seen is more and more newer chains being added by Circle and less legacy chains. And when I talk about legacy chains, I mean chains that were created before 2020 or 2021. Those are legacy chains. All the chains after that basically launched with the problems that the legacy chains have solved. They solved it, and then they launched their own chain. So if you look here, over the last few years, we've seen Base added, we've seen CeeLo added, we have seen Hedera added, Linea, right? I don't even know what this blockchain is. Linea blockchain is ZK EVM layer 2 powered by consensus. Okay, so again, another institution. Noble was recently added, Optimism mainnet, somewhat fairly newly added Sonic. Don't know what Sonic is. Sonic is a high performance EVM layer 1 built to scale DeFi with sub-second transaction finality and 10,000 plus transactions per second. Interesting. And by the way, what they also show here is what top applications are using USDC on Solana within that ecosystem. That's a new feature. I didn't even see that before, which is awesome because it lets you know which chains, like Polygon, is the top apps using USDC on Polygon is Aave, Compound, and Curve, right? So we know that Polygon and the USDC within Polygon probably is highly liquid in this DeFi ecosystem and highly integrated. I mean, hello, how's that not good? And so, yeah, that was a big thing for me to see the newer chains popping up here and the legacy chains not here, right? XRP isn't here. Cardano's not here. Stellar blockchain isn't here. Litecoin isn't here, right? Maybe Litecoin is more of a Bitcoin, not a DeFi product, but you guys kind of get the point. And so my question over the years has been, why are these other chains not adding USDC? Is it because they don't have the functionality to do it? Or is it because Circle won't do it? Because if Circle doesn't support the chain natively, technically you could build a bridge to one of these chains to access that liquidity. But they didn't do that either, right? XRP, Cardano, Stellar, they don't have interoperability with other chains to be able to even access the USDC liquidity on those. So they have no stable coins native to the chain. They have no interoperability to be able to connect with those chains that do have the liquidity. That's a huge problem. And with the stablecoin bills moving forward and getting regulation around this and the banks more involved, what do you think they're going to be doing and where they're going to be putting their money or focus their attention after Bitcoin and Ethereum? It's going to be in the chains with the digital dollar, especially when the US is pushing the digital dollar to help maintain the dollar as the US world reserve currency. And this goes over a lot of people's heads. They're like, but Cryptoviser, we don't need a stable coin. There's no need to put a stable coin on our blockchain. It's like, what? No, there absolutely is. And here's the data to prove it. So what you really want to look at is, by the way, this is Dune Analytics, and this is the USDC dashboard, which shows us the activity on chain. Now, this specific chart over here, it looks like it was updated a month ago, or it updates every month. It says last updated 1 month ago, so it's still fairly accurate. But what we can see here is the usage of USDC has increased on every single chain. The transaction volume on all Ethereum virtual machines has increased substantially since the beginning of 2024. And again, go type on YouTube Cryptoviser USDC, and you're going to see those videos at the beginning of 2024. And even in 2023, when I kept saying, these chains need to add this now. And if they don't, they're not going to be doing that well. And what did we see? We saw chains that popped up recently. Look at Arbitrum. It looks like in the month, they had 20 million transactions in volume utilizing USDC. You can see here Base, 33 million. And just huge growth. I mean, huge growth. And a lot of this was because USDC was added at the beginning or started ramping up at the beginning of 2024. You can see USDC transaction volume on Ethereum. I mean, just pull up from the beginning of 2024. Let's pull up right here. 2024, there was 2.1 million transactions in January of 2024. And now it's saying March of 2025, 1 year later, 6.1. So we went from 2.6 to 6.1, which is basically like 2.5x in just about a year, a little bit over 1 year. You can see the distribution of where all these coins are moving and transacting. You can see before 2024 or maybe 2023, most of it was just on Ethereum and Avalanche. You see, there was not a lot of USDC usage on the other chains. But beginning at the end of 2023 and into 2024, we started to see a ramp up on all of these other layer twos, and I call them Ethereum adjacent chains like Optimism, Arbitrum, Avalanche, same type of technologies that Ethereum has, but just separate blockchains. You can clearly see that this started to ramp up and they started to take some of that market share away from Ethereum, bringing us to where we are today, where it's a nice blend, where Base has 41% of the USDC usage and Ethereum only has 7.6% of the USDC usage. A lot of this could also be due to cross-chain like interoperability or cross-chain transfers of the USDC from other chains. We also know a lot of people are utilizing Base because it's much cheaper and faster than Ethereum. But yeah, a huge blend of USDC. And the point here is like that USDC is being used and transacted, and it gives you connections to all of these other chains. Now, again, what's interesting here is that most of the USDC transaction volume distribution this year in 2025 is coming from Base. But when you look at the EVM USDC supply distribution, which is this chart right here, it's showing that basically 80% of the USDC supply is on Ethereum, with Arbitrum being the second and Base being the third. So again, that goes to my point that most of this is probably cross-chain transferred USDC or just more usage on it. You can see unique wallet addresses of USDC has increased substantially. The dollar volume has also increased substantially. Dollar volume in February of 2025 was $2.4 trillion. I think that's trillion. I had to pause for a second. Thousand, million, billion, trillion. Yeah, $2.4 trillion in February of 2025. That's unbelievable. Coming from 2023, 122 billion. So basically, it 20x'd the amount of volume. And so people say, Cryptoviser, why are you talking about so much about stablecoins? Who cares about stablecoins? Well, like I said, which cryptos have stablecoins native, which have bridges, and which don't? The answer is very clear. And you can see Tether versus USDC across all chains. You can see that most of Tether is being used by Tron, BNB, Solana, Polygon, and Ethereum, but mostly by BNB and Tron, right? That's the Tether chain, where USDC is mostly used by Solana and Polygon, and that's it. That's the two largest ones across the different chains. You can also see the receivers. Who is receiving Tether? Mostly Tron and BNB, right? Where when you're looking at USDC, you're seeing a bigger blend of Polygon and Solana and Ethereum and Arbitrum. And so this goes to the question, right? Not all stable coins are created equal. There's a reason that Tron and BNB are using Tether, not USDC, and there's a reason that Arbitrum and Base and Polygon are using USDC more than they're using Tether. I'm sure you guys can kind of figure out it. A lot of that's probably regulatory stuff, but that's neither here nor there. The bottom line is that these stable coins are bringing massive liquidity to the ecosystems of all of these different chains. And the chains that don't have this stable coin liquidity, they cannot succeed. Now you may be saying, Cryptoviser, you're just being negative. Of course they can succeed. Well, how can they succeed when they don't have, bridges to other chains, or they don't have the liquidity? And you can see that here right in DeFi, because stablecoins are mostly used for decentralized finance. And so if you look at decentralized finance and you look at where the money is, Ethereum, Solana, Tron, Bitcoin, BSC, that's Binance Smart Chain, Base, Arbitrum, Sui, Avalanche, Aptos. These are the chains that have high DeFi TVL, high DeFi usage, and also connection to USDC. Name any of these top 10 that don't have USDC or Tether integration. They all do. All of them. Maybe not Bitcoin. Although I think that Tether does have connections with Bitcoin, but I could be wrong on that. But yeah, either way, something to think about. That's for sure. The other thing that we have to think about is the cross-chain compatibility. And for this, I'm looking at Chainlink. Why am I looking at Chainlink? Because Chainlink founder was at the White House during the crypto roundtable. We know that a lot of the major crypto firms are looking at Chainlink. Chainlink is highly interoperated via their cross-chain interoperability protocol, CCIP. Now, the secure interoperability protocol with Chainlink is for connecting private blockchains, enabling token transfers, sending cross-chain messages, building cross-chain applications, enabling cross-chain real-world assets, scaling cross-chain ecosystems, connecting private and public blockchains, and so on and so forth. I mean, we can keep going on and on. And what we've seen is Chainlink continuing to grow this ecosystem of this cross-chain interoperability protocol. This is the connector to connect off-chain data with on-chain data, to connect on-chain data with off-chain data, and also to connect on-chain data with other on-chain data. Now, if you look at the actual cross-chain interoperability protocol directory, you can see 57 protocols have this connection, right? Which means that any of these can connect to any of the other ones. So it's full interoperability. And what I would say is, why does the Corn blockchain, which I've never even heard of, or the Hashkey blockchain, or the Ink blockchain, or the Hemi blockchain, again, never heard of any of these. Why do they have cross-chain interoperability, but some of the top 50 protocols don't? Why is that? And by the way, I don't know the answer to these questions. I don't know why Rootstock and Scroll and Ronin, which is a gaming platform from a few years back, why does the Shibarium, right? Shiba Inu has more DeFi than some of the protocols in the top 50. And you guys are going to say, well, Cryptoviser, name the protocols. I don't have to name the protocols. Just go onto the cross-chain interoperability protocol website, go to the top 50, and see if your favorite coin is there. Most of them that are, hyped up coins, they're not there. And so they don't have USDC. They don't have cross-chain interoperability protocol. And therefore, they don't have a lot of DeFi. And so those coins, how can they be in the top 50? How can these coins surpass all these other blockchains? I mean, take XRP, for instance, right? Because now Ripple and XRP are in the spotlight. Everybody's looking at this coin and saying, well, they beat the SEC lawsuit. Well, now they have their own regulated stable coin. But what else? What else? They're just going to be a payment rail, a private payment rail that doesn't even need to use the crypto coin, and that the company behind it, Ripple, is going to continue to sell XRP on the open market to fund their operations until they have no more coins left. And so that's going to continually dilute the shareholder. How is this still in the top 10? I not understand it at all. I really don't. And the fact that XRP has no USDC, yet they're trying to buy Circle. Ripple has no cross-chain interoperability protocol. They don't really have any DeFi either. And so maybe that's not what they're going for, but it seems like they are. Why would they be trying to buy Circle if they didn't want USDC? But then you can ask the same question. Why do they want Circle if they don't even have USDC connected to their crypto or their blockchain or RippleNet, right? And so that's just one of the coins in the top 50 that does not have DeFi, that does not have cross-chain interoperability, does not have stable coins on it besides their own. They have RLUSD. I want to make that clear. But it's not, even RLUSD is not highly interoperated with other coins and other chains. And this is a huge issue. And so this is a development metric that people do not look at. This is one of the development metrics I do look at, because I think it's important to understand what the metrics of these blockchains are so that I can understand, is this the best blockchain to be in? Because again, most cryptos will fail. Most of these cryptos will not achieve the technological hurdles that they need to achieve to become better than Ethereum or to become a global platform that companies and organizations and banks want to use. We're in a different world now in crypto. This is not about retail hype. This is about real products with real developers and real use cases. It's not about what if, what can we achieve? It's about what you're doing today to achieve that. And so as investors, we have to look at that and say, is Marty Party correct? Is the blockchain uh, is the blockchain ecosystem going through a change today? And I do believe it is, especially with the stablecoin bill, especially with the regulatory agencies becoming more crypto friendly, and the institutions are buying. They're only buying coins that have high interoperability. They're only buying coins that people actually use the blockchain behind. And to show you cross-chain interoperability protocol aggregate tokens transferred, this is meaning in total. You can see here, I wish we could do this by month, but it's by day. You can see in basically 2025, the total, which I don't even think you can see. Now you can see it. The total is at the bottom when I'm clicking here. Anywhere from $1 to $10 million worth of coins being transferred in a day. Cumulative USD tokens transferred altogether since the inception of USD tokens. It looks like we'll just go from the beginning of 2024. Same with the other charts. So you can see at the beginning of 2024, there was about 788,000 of cumulative USD tokens transferred, and now they have $860 million dollars. Sorry, $1 million. So 860 million, almost a billion. It's not a huge amount, but it is still a lot. The total transferred by volume by token symbol, you can see most of it was transferred was USDC. Duh. The second largest was LBTC. I don't even know what LBTC is. And then GHO, don't know what that is. Solve Bitcoin, don't know what that is. But these are on the cross-chain interoperability protocol. But the number one transfer USD by volume was USDC. So these people who say, but Cryptoviser, we don't need a stablecoin. We don't need a USDC on our chain. I mean, the data says that's bullshit. The data says that you do. The data says, yes, USDC is the most transferred coin on the CCIP. And it's the most used stablecoin outside of Tron, and it's the most used stablecoin on networks other than Tron and Binance, as we just covered a few minutes ago. The other thing that we have to look at is where the big money is positioning themselves, like World Liberty Finance. Now, as you guys know, World Liberty Finance is the presidential family's kind of crypto portfolio company. And where are they investing their money, right? We can see their portfolio, and some of these assets they no longer own, but they've pretty much owned all these within the last year. And what you see here is new generation, highly interoperable Say blockchain, Tron, Chainlink, right? Ethereum, Aave, Ethena, Ondo Finance, Move, Avalanche, Mantle, Tether, USDC, White Rock. I don't even know what that is. They just recently purchased EOS and then another stablecoin called Falcon. And so, what is the theme of all of these coins that they're buying? These are all DeFi coins, decentralized finance. They're all highly interoperable, and they have connections, whether direct connections or these bridged connections to USDC. And so, USDC and also other blockchains as well. And so this, in my view, is like the key of like where the big money is, because BlackRock, they're just focusing on Bitcoin. Most of the institutions are just going to focus on Bitcoin. But if we look at like where the non-traditional financial institutions are, which is kind of like what World Liberty Finance is, or Grayscale, or Bitwise, this is where they're focusing. They're focusing on highly interoperable chains that have products, chains that have usage and a lot of usage. And so the coins that don't, why are they in the top 50? Why are these still in the the top crypto picks in everybody's portfolio? Well, some of it has to do with a lot of the influencers. They have very heavy bags from the last cycle, and a lot of these influencers didn't reallocate their bags during the bear market or even recently in the bull market, right? I've told my viewers throughout the course of this channel, I think it was like 3 weeks before or 2 weeks before FTX collapsed, I told my viewers, I had a video up that was something like rearranging my portfolio or selling this, buying this. And basically, I was like, even though we are seeing a dip in the market, this is a potential to reallocate to positions that you think are going to do better. Sure enough, by rotating out of positions and holding cash, FTX collapsed. We were able to buy the bottom of the market, which most people weren't able to do because they were focused more on is Binance going down next? Is Grayscale going down next? I can't believe FTX went down. Meanwhile, that was the bottom of the market. And so now we're approaching the top of the market. We're approaching the end of the bull run. When that's going to be, who knows? Maybe it's going to be 25, 2026. It doesn't matter. The point is, the money is going to consolidate into the top projects by actual usage, by actual integration of different technologies, and by the fundamentals. And I've showed you quite a bit of information on this video and many charts that clearly show stablecoins are very key to this future. And also, connectivity to other chains is very critical. And the banks are getting involved. And think about banks. Banks are interconnected. You could send money from the US and send it to China, and the banks work together, right? Maybe they don't like each other on a political sense or whatever, but they work together and make that transfer happen. That's how blockchain needs to work. And these siloed blockchains, they are not going to succeed. I cannot see how they will when there's no connection. The blockchains that have not produced any of the capabilities that these new blockchains have produced, they cannot succeed because they're always going to be trying to just get up to the standard. When meanwhile, the new chains like Chainlink, like Ondo Finance, they are launching with those capabilities. And if they need to adjust capabilities, they do it much faster than these legacy chains. And so the legacy chains, this is always going to happen, right? As a new cycle comes around, new technologies are, developed, and then new blockchains are produced with those new technologies already implemented. While the older chains have to kind of figure out, do they even want to implement that? And that's the issue that I think that we're seeing with stablecoins. Some of these blockchains thought that stablecoins would not get the usage or the regulatory, approvals that we have today, even though I told my viewers USDC would be the digital dollar. I've said that many, many times on this channel. And some blockchains chose to ignore USDC, ignore Tether, and focus on creating their own stable coins, like what Ripple did. And this doesn't support the chain. This doesn't support interoperability. This doesn't support liquidity. Because here's the deal. Developers and venture capitalists who are in USDC or Tether, that's what they're in. They're not going and saying, well, let's go buy RLUSD. That way we can transact on the XRP network. No. That's not what they're looking at. They're looking at, well, I'm on Ethereum or I'm on Solana right now. And I want to maybe use Polygon because it's faster. So all I got to do is transfer my coins, transfer my wealth, transfer my value, smart contract, whatever the situation is, move it over to the Polygon blockchain. And you can do that instantaneously through these bridges, through the cross-chain interoperability protocol, through USDC. And there's still chains that can't do any of that. They're just completely siloed. So what was the point of Ripple creating their own stablecoin? Did they think? I mean, the XRP army, when Ripple launched the stablecoin, the XRP army was saying in the comments, Cryptoviser, you're an idiot. It's definitely going to go higher than USDC's market cap. I'm like, wait, they have $300 million right now. That was their launch, which was just basically seed investment in the stablecoin. Why reinvent the wheel when all they have to do is connect to USDC and they get $60 billion of instant liquidity? Instant liquidity. They chose not to do that. Many other blockchains chose the same thing. Cross-chain interoperability protocol, same thing. And so then it leads me to ask even more questions like, are they choosing not to implement it, or is the technology not capable of implementing it? Like maybe Ripple can't implement USDC. Maybe Ripple can't implement smart contracts because that's really not what XRP network is about. XRP network is about cross-border payments, right? A payment rail, which is different than a DeFi rail. So we have to think about that as well. But I mean, based on what I'm seeing in the markets, based on where I'm seeing the investments going, and based on what I'm seeing from the banks, I mean, guys, JP Morgan just tested a DeFi transaction on Ondo Finance, not on Ripple, not on Cardano, not on Stellar. They did it on the Ondo Finance chain. So if you see that and you're like, you know what, we don't need DeFi. I mean, the bank is just testing the transaction. You're missing the point. JP Morgan is testing it, meaning they're probably doing more tests. Guys, JP Morgan built their own blockchain and their own crypto coin and funds consensus or funded consensus in the past. You think that they're not going to build something else and that they're not going to connect to DeFi and utilize DeFi? Of course they are. And so if your chain, and by the way, it's not just JP Morgan, they're just the biggest, it's probably all the banks. And so if your chain is not connected to these other chains, you lose all that. You cannot be a part of it. And so I don't know what the answer is, but I do agree with Marty Party. The stablecoin bill going into law, if it does, and the crypto industry is good with the wording of it, and they don't pull out anything out of the bill, well, things change going forward. And you really have to look at your portfolio and say, is this the right portfolio for where we are today? Because like I always talk about on this channel, we have to trade the market in front of us, not the market we want. Of course, I want the market to go much, much higher, but that doesn't mean it will. And by the way, Bitcoiners are slamming Trump's crypto strategic reserve. This is from March when he tweeted about XRP, Solana, and Cardano being in the strategic reserve. And what did they do? They kind of pulled that all back. And we found out after that the president didn't really know why, like what the implication of tweeting that was going to be. I don't know. I think that there's just so much bullishness in the market that people are missing the point of this technology, right? Because the technology is not created just to make you rich. It's created to like help make the world better and make our finances better and fees and transactions easier and cheaper and faster. And a lot of people are missing that. They're like, no, but my coin is the best. My coin is the best. And it's like, but can your coin solve these problems? And if it can't, then everything that you're talking about is just nonsense. It's the same thing in the stock market. I mean, people love Tesla, and I've never been for or against Tesla. I'm kind of neutral. But everybody's talking about now the robo-taxis. And it's like they've been talking about the robo-taxis since 2019. I remember, I think it was 2019 or 2020, Elon did an interview and he said, yeah, we're going to have 100,000 robo-taxis, something like that. A very high number of robo-taxis on the road within a year. We're like 7 years later, we still don't have that. And so it's not saying that they're not creating the technology or working on it. I do think that Tesla is. But some of the stuff that we're looking at is not the fundamentals, right? If you looked at that statement from Elon and said, okay, is this really going to happen? Is it really going to be done in a year? Well, how many test drives have you had? How many test taxis have you put on the road? If you haven't put any, and you're saying it's going to be approved in a year and have, thousands of these on the road, it just doesn't make sense, right? And so that's going back to the fundamentals versus the hype. And I think that's where we are in the cycle, where people have to start looking at the fundamentals and not the hype. And I think, again, like I say on many of my videos, all roads lead to Bitcoin. And obviously outside of Bitcoin, it's Ethereum and the highly interoperable chains. In my view, it's the stablecoin compatible chains and the cross-chain interoperability protocol chains. If they don't have these or they don't have any connections to other chains, effectively they're not where we are in 2025 in the blockchain ecosystem. And for that, those coins are definitely not investable. And by the way, I didn't even go deep diving into the chains with DeFi, but I mean, we can look at the protocols, we can look at the total value locked, we can look at the usage and the growth of these ecosystems. And all of that, all of the growth, all of the usage is really focused on these highly interoperable chains with high liquidity from these stablecoins. And so it's not me saying this, it's the data. Anyway, hopefully you guys enjoyed today's video. Don't forget to give the video a thumbs up, hit the subscribe button. That way you never miss a new video. And let me know your thoughts below. Like, do you agree with Marty Party that everything has changed. And this theoretical performance and theoretical scalability that has never been achieved or even tested to see if it could be achieved, these chains are going to fail and lose value. I completely agree with this because that's not where the big money is going to go. And so while the big money continues to eat these larger blockchains, the smaller ones are going to just kind of, I think, fade very slowly from a price perspective and a usage and hype perspective as well, unless they change things very rapidly. And I don't know that they're going to be able to, because again, in 2025, if your chain doesn't have interoperability and your chain doesn't have stable coins, you're probably never going to have it, right? Because if they wanted to implement it already, they would have. They haven't. Anyway, I'll see you guys on the next video. Invest responsibly and crypto on.